Hi, we're back. This is Josh Jelinski, the financial quarterback, coming to you live. 800-321-0710. So, Toby, we talked a little bit about trusts, foundations. What other tips do you have for our listeners who maybe own businesses or don't, maybe just want to transmit money and values to the next generation? That was an interesting talk.
Yeah, I would say they need folks like you, not to say, hey, I'm on your show, so here, go to Josh. I would just say that when you say financial quarterback, that actually is exactly what folks need. They need someone who's going to help look at it holistically. Because you go into the bank, and the bank's going to tell you, here's products that we have. So they might sell you a CD, maybe certain types of investments. You go to the insurance guy, they're gonna pitch what they have. You go to the broker, and they may want you everything all in the stock market, right? You want someone who's going to look at everything holistically. So when you say financial quarterback, I would say that's probably the missing piece in 90% of the folks that come in. Is they're going to the cable news networks, they're reading the newspapers, and they're being kind of guided that way. Or worse yet, they're going on to late night TV, and they grab into a guru, spend $50,000 for something that arguably is not going to work.
That's very good.
Realistically, it's a long time horizon. One of the reasons why I picked 200 years to 300 years is because it will guide our position now. And the easiest way to say this is, like, Josh, I know you have a bunch of kids. If I gave you $1,000 and said, hey, Josh, this is for one of your kids' education, and I said, this is really important. I'm gonna put $1,000, or better yet, I give you a gold bar, and I say, this is for their education. You're going to treat that money differently than the money that's just sitting in your bank account, simply because it has an intention behind it. And I tell people that, like, I live in Las Vegas, where people will hit a jackpot, they'll get an easy 20,000, and they blow through that so quickly because it has no intention behind it. They don't, it's like, oh, this is free money. It's like the stimulus money. The number one things that are being purchased out there. Like I own apartment complex, and we joke because the stimulus money hits and everybody's getting a big screen TV. Like, you'd be shocked. We're looking at the dumpsters. We're having to get extra dumpsters because there's so many boxes out there, and we're like, wait a second, you're renting an apartment. No offense. You get a windfall, and because you don't have an intention for it, you don't have any place that you're going to put it, you immediately go out and you follow the marketing, whatever's being put in front of you, and you're constantly being hit on TV and online for stuff to buy, and you go out and get the big screen TV.
Or they invest in Dogecoin, which is essentially nothing.
I just think that's hilarious.
It's absurd.
Elon Musk, as soon as he said it, I have to admit, I went out and bought $100 of it because I was like, oh my God, this thing's going to go up. And it's gone up like 800%.
Oh,
just
gosh.
Silly. I just thought that was, every time he opens his mouth, he makes money.
Yeah, it's crazy though. I mean, it's really a sad, here's why, right? You talk about in your book, Infinity Investing, the way of buying wealth in the stock market over the long haul is buying a stock like, and we're not telling you to go out and buy stocks, but Coca-Cola, the Dividend Aristocrats. Think, Clorox. They're not reevaluating their formula every year. Think Hershey's. They're not rechanging their formula every year. And we own some of that for clients and such. So I don't want to recommend any buy or sells over the airs. But the point is, we've gone from buying good quality things that produce income to now, because of the Amazon model, there's really a different model of investing now, which is a stock doesn't have to treat its shareholders well. Back in the day, you bought a stock based on how they treated shareholders. Did they pay a dividend faithfully? Was the dividend sustainable? Now these companies are saying, we're not going to pay a dividend. We're going to invest for growth. We're going to buy everybody up with the low interest rates. And people wonder, why the rich keep getting richer. It's because in essence, the middle class and fund managers are not demanding being treated well as a shareholder. Do you think that method of income investing, I'm just talking about Dividend Aristocrats because I really like Dividend Aristocrat investing, which is, if you don't know, it's featured in the book Infinity Investing. I like buying companies that have a sustainable track record of dividend, not necessarily that they're paying a high dividend, but they have a history of growing that dividend. Is that method of investing sort of dead? Because if you look at Tesla, if you look at Amazon, they're following a different model, one that I think is horrible for capitalism. But, are we in a different, is this time different?
It's really great you say that. So here's my experience. I've worked with a whole bunch of companies that train on trading. And I quite literally have had probably 10,000 clients that were stock traders. And out of that 10,000, I would say 90% of them lost money because they were trying to time the market. So you ask, why did I write this book? It's because I don't want people to face plan. I'm a tax attorney. I need you to make a lot of money so you have tax problems, right? It doesn't help me much if kind of like the barber. If I let you lose all your hair, I have nothing to cut. So, so infinity investing is like the hair cream being sold by the barber. I need your hair to be growing so fast that we have to cut it every week, right? So what I saw was that the people that were trying to time the market were getting their butts handed to them by Wall Street. The people that were doing exactly what you just said, they were focusing in on income producing companies, and they were finding ways that companies that had compounders in it. In other words, companies that were going to continue to grow exponentially because their market share is growing and they're sharing their profits with you. Those were the people that were making money throughout 2008, 9, 10, 11, 12, 13, 14, every year they make money. Even when the market pulls back, who cares? The company's doing just fine. So like the Aristocrat you said, those are companies that are more than $1 billion market cap, making increasing dividends for 25 years or more. There's the Kings also, which is 50 years or more. And those are companies that no matter what, it's the pandemic, it's the bubble burst, it's the recession, it's terrorist attacks. No matter what was going on, they were profitable and they rewarded their shareholders. And I just noticed that trend that the folks that made money consistently and were the wealthiest didn't gamble. They didn't buy things and hope they went up. They bought things for the income and hoped things stayed the same. And if the company went up in value, that was a bonus. But they bought it right on the first day so that the income was coming in. And yes, that's not dead. It's just the really rich folks are doing that. And then they do their gambling too. They're definitely getting involved in, the Amazons, but in a different way. They're not compelled to sell it. Like if they want to hold on to it for the long haul, they can. I don't know why somebody would. I still look at Amazon and scratch my head because I'm like, it's a tax-free loan or interest-free loan is what I really look at. It's like you're just giving, you gave the company a lot of money, kind of goes out and you're not getting anything in return.
Yeah, I mean, I do think over decades, the next time we have a crash, if the Fed lets us have a true crash, those companies living on cheap money will sort of fall. And I like the Warren Buffett method of investing. In 2 days, we have the Berkshire Hathaway shareholders conference. That's always, you glean some real gems. So we'll be back next with some final questions for Toby Mathis on his new book, Infinity Investing, which will be yours free when you schedule and keep your no obligation 45-minute strategy session. You get the Income for Life blueprint and the book Infinity Investing. When we return, this is Josh Jelinski, the financial quarterback. Don't touch that dial.
The preceding program was sponsored by the Jelinski Advisory Group.
Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jelinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jelinsky.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jelinsky and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation.
Advisory services offered through Wealth Quarterback LLC.